Hi, this is Robert with another installment of WealthLab University. In this lesson, we're going to pick up where we kind of left off with the strategy window, learning some more elements about the strategy window, and then getting into actually designing and creating strategies with building block strategies. But the first thing I want to do is draw your attention to the home page again, and notice that we have some updates here showing, and the way to conveniently download and install updates is by right-clicking and selecting all the upgrades. You don't necessarily want to install everything, so just all the upgrades, and just hit the Update Selected Items button. This will download the updates and start the wizard to start installing. And I'll speed the video up and just go through that. Well, actually, the first thing I want to do is I want to show you the interactive brokers I have installed. Let's go ahead and get this started. Then we'll get back to interactive brokers. I'm updating the interactive brokers extension. Quite a number of you probably will be using interactive brokers, so it's worth mentioning. So while that's updating, let's go to the extensions page, and it's going to continue. The wizard's going to continue. I'm going to ignore that for a minute, and let's just put that to the side and go to the Interactive Brokers extension. So when you install the Interactive Brokers extension, you can use WealthLab with Interactive Brokers Traders Workstation or the IB Gateway. And it's important that you go through these one-time setup instructions to set up TWS for the connection with WealthLab. And it's important that you follow all the steps. So I just want to mention that. Let's get back to the installation, finish this Build 81 installation. Okay, and we're all back, started up with WealthLab, and you can see that the WealthLab 8 client is installed and updated to Build 81. Same with the Interactive Brokers extension, up to Build 44. Now, it's always a good idea to watch the build highlight videos with Glitch. He explains all the main features that have been updated. And one of the things you'll notice right now is the stars next to the certain data sets, which means that those data sets are dynamic data sets. And with Build 81, you can actually create your own dynamic data sets now. So I encourage you to watch the build highlights video here. For the other updates, for example, updated interactive brokers, you can always go back to the page and check out the change log for the updates there. Okay, when we finished the last lesson, we were talking about the strategy window. So let's open up a real sample strategy. So if you go to the strategies section here, you'll see there's a sample strategies folder. And let's go with, this is a typical moving average crossover strategy. And let's not worry too much about the rules here because we're going to do this ourselves later. But let's go back into the strategy settings, and I want to show you something about data loading. Now, when WealthLab, when you run a backtest, okay, WealthLab loads the data that you've requested in the strategy settings. Well, in this case, it just ran it on the Dow 30. And let's go back to a single symbol so we can concentrate on a single symbol. And notice that when I switched to the single symbol, this message down here is changed to need to load data. So the important thing to know is when you switch any of these settings for data, WealthLab will go out and look for that data. And remember, it does it in the order of the checked providers that you have here. Okay? So when I ran that on Intel, you can check in the chart. It grabbed wealth data for that and ran the strategy on that. If I make any other change to the settings, let's say bump it down to 9 years, it says need to load data again. And so it's going to refresh that chart, grab the data for the back test, and then run the back test on that 9 years of data now. Now, let's say you're doing some back testing on some intraday data. So let's get a week of data here of 30-minute bars, something that's pretty quick. And let's run this on QQQ or something. Okay. And we have a chart of 30-minute data, not very much, but that's okay. The idea is if you're backtesting with intraday data, for example, in the middle of the day and a new 30-minute bar comes in and you hit run backtest again, you're not going to get that bar because the data, the symbol is already loaded, or the symbols are already loaded. If you want to get fresh data, click that message in the lower left-hand corner, which will tell WealthLab to go out and get the new bars. Okay, so that's an important thing to know, that when the data is loaded and you keep hitting run back test, you're just going to keep using the data that's already loaded unless you change the settings here or you click that message. Now, let's talk a little bit about position sizing. First, let's look at this design surface. We're using market signals, right? So buy at market, sell at market mean that you're going to buy at the open of the next bar. But let's go back to our daily chart. Let's get some years of data there. So with a daily chart, it would be the open of the next day. Okay, weekly chart, the open of the next week. Now, how do we know when we create the signal, we don't know what the price of the open is going to be. So we use something called the basis price. The basis price, unless it's a stop or limit order, the basis price is going to be the market close. It's the price that you know, the last close is the basis price, generally speaking. We have a selection here called market at next open that we're going to talk about in a second. But a lot of traders like to trade 100% equity when you're doing back testing on ETF symbols like the QQQ. And let's go ahead and run this. Notice that I have 1.2 margin here set up. Now, let's click to, this is called the position navigator. Well, we can get to a position very quickly by clicking the position navigator. Otherwise, we can go to the back test results and click on the positions tab. Remember that. Let's say we wanted to look at this position, just double click it. That brings it up in the chart, nice and highlighted. So let's take a look at this one. You can see that the market, let's make these bars a little bit bigger. The market closed and it opened a little bit lower that next day. Let's use the navigator to go to the next position. In this case, the market closed at 111.49 and opened the next day higher at 111.79. So this is the condition that I want to talk about. We send in our signal, we only know the price at this time. We don't know what the price at the open is going to be. So our basis price of this market order is going to be 111.49. Let's go ahead and use margin factor 1. So we don't have any margin and we're using 100% sizing. So we're sizing this position based on this, using all of our equity based on the closing price of this day. And now let's run the strategy again. And notice how this position disappeared. That's because for the number of shares required at this price exceeded the buying power that we had. So this turns into what's called a non-sufficient fund position, NSF position. And we have some videos on that. But let's just take a look at the metrics report. You'll see that the NSF position count is 2. So 2 of those trades that we previously did weren't able to fill in the back test because we had insufficient funds. So this is the reason why if you use a little bit of margin for the back test, then with 100% sizing, you can get those positions. Let's go back to the chart. You can see that that position is there. The margin gives you some leeway to get those positions. If you look at the equity curve, you'll notice that, for example, here, well, we didn't explain the equity curve yet, but the dark green is when you're in a position, the light green is a cash position. And when you go below 0 here, this light green down here means that you're actually using margin. So this would be, if we look at the very last trade, This would be another example where you can see where we gapped up quite a bit here, so we used a lot of margin to be able to fill this position. So be wary of that when you're using 100% margin. You either need to use margin factor, or you can use the market open X bar. Now, this isn't something that you can trade with, but as far as the backtest goes, WealthLab will peek ahead, use that opening price for sizing the position, and then you'll get all the positions that way too. If you don't want to use the margin, so you can see that we still got our big gapped position there. But when you're trading, when you're actually trading and you generate a signal for the next bar, we don't know what that open is going to be. So this basis price isn't used for live trading unless you happen to have a broker that does fractional shares and accepts a nominal cash amount for an order. And there's not many brokers out there that do that yet. Okay, and another position sizing that you might be working with when you first start designing strategy are fixed value. So you might want to say, what would happen if I'm always taking $10,000 positions? And if you start with $100,000 of capital, then you have quite a bit of leeway with the cash. Of course, your positions sizes are going to be quite a bit smaller here. You can see that we're only using about 10% of the equity there. So really quickly, the difference between fixed value, you're always using the same size, whereas if you use the percent of equity, and let's say we were using 5% of equity to get our $5,000 sizes at the beginning, you might, for example, you might use $5,000 sizes and test with the Dow 30. And if we actually had 30 positions, we still wouldn't have enough money for all of the trades. Let's see what we got in our backtest results here really quickly. Look at our equity curve. Yeah, you can see that we're using all of our equity, and we're probably going to have a significant number of NSF positions if we look at the metrics report. NSF ratio. So we have 99 trades that we couldn't take in this backtest. Okay, so there's some videos on NSF positions that cover that. We don't want to really get into that yet too much. We want to get into designing strategies. And that's what we're going to do next. Okay, so let's get rid of this strategy. And let's open up a chart. And as technical traders, generally the way you start with a strategy is you're looking at charts and indicators, and you see patterns. Let's say, for example, we're going to do a very simple strategy. Let's get an SMA indicator. And, oops, didn't grab it. Drag it into the strategy, and we'll call it a 50-day moving average. Okay. And, like I said, this is a very simple strategy. You're going to, we see that it's probably a good idea to be long buy when the close goes above the moving average, and we might want to sell when it goes below the moving average, because this could keep going down. If we weren't peaking, we didn't know that this stayed at this level and started going up again. So let's make a strategy that buys when the closing price. So the closing price, we could actually look at this as the closing price is an indicator if we look at a line chart, for example. So you can see as the closing price crosses above this and crosses below it, we'll sell. But I like looking at candlesticks. So, okay, so how do we do that? We start with a new building block strategy. So we click on the building blocks, and we can get a new building block strategy there, or from new strategy, click on new building block. Okay. When we start with a new building block strategy, we get two signal blocks that are just default blocks. We don't need you can put those in yourself, but they just all start. It just starts this way. Now notice that blocks have to be paired. Buy blocks have to be paired with sell blocks. Short blocks have to be paired with cover blocks. So for example, if I tried to drag in a sell at market strategy, I'm going to get an error that says you need an entry block because you can't sell something that you haven't bought yet. So let's go ahead and put the buy at market, and then if you tried to drag in a cover at market block, there's a mismatch because you can't cover a long signal, a long trade that is. So you get these warnings to try to keep you honest there. Okay, so let's start with the default, buy at market, sell at market. Now, this is already a strategy. It's not very interesting, but if we just ran this back test, let's look at our settings. Yeah, we're running on QQQ. And I think we've done this already. You can see that it just buys and sells every other day. Okay, so to make the strategy a little bit more interesting, we need to drag in conditions, when to buy and when to sell. So let's collapse our entry and exits and get right into our condition blocks. We'll go over these OR and multi-condition group blocks later. These are ways to combine conditions. Okay, so we're going to buy when an indicator crosses above another indicator. So we can either use the compare indicator, but usually a compare indicator is more of a filter indicator, usually, but you could use it for this purpose. But these conditions that cross or turn or break, these are trigger conditions, and those are conditions that you would want to use for trading. There's a subtle difference there, and we'll demonstrate that later. But we're going to drag in this indicator crosses indicator, and it just happens to default to exactly what we need, although I think we used a 50-day moving average. Yeah. First of all, notice that our price components are right at the top of this list. So open, high, low, close, volume, if you wanted to use those, they're considered indicators, and also the average prices are right at the top of the list. You can also type in letters, if you know exactly what indicator you want to use. But let's go back to our close, and we're going to say close crosses over our moving average. And here is where we set the parameters of an indicator. If an indicator has parameters, it'll have another block here. And we're going to set our period to 50. Okay. And let's go ahead and just run that. You'll see that when we cross over, we're going to cross over and we're going to buy and we're going to sell, because the very next day we're going to sell at market because we haven't dragged a condition there yet. So let's go back to a place where we cross over. Okay. And you can see that this is doing what we wanted. Here we're below the moving average, and the close crossed above it, and then we bought at market the next day. So remember, we're always evaluating the strategy at the close of the bar. So we have all of the bar data, and at that time we know what the high, low, and the close are. The open you do know at the beginning of the bar, and that's a special case, but we can get to that later. But you can see that the close crossed over, and we bought at the open the next day. So you can hover over that. We bought at 368.53, and if you look at the opening price, it's I can't do that. It's 368.53. So that we bought at the open. So let's go ahead and back to our design surface and enter the opposite rule to sell at when the close crosses below. So here we go. We got close. It defaulted to over, so we want to cross under, and the moving average is 50. Okay, and let's run our strategy again and take a look at a chart. And here we go. This is a good demonstration. Notice how we crossed over and we bought at the open. Here we crossed under and we sold at the open, the next bar. And this is actually a good case, because notice how we sold at the open here, but this bar actually crossed over. Here's the close under it, and then it crossed over it, and then we bought at the open of the next bar. Okay, and as luck would have it, we closed above it, we crossed below it, and we sold again. So this is a typical whipsaw pattern when you're trading moving averages. And we can try to do something with that. Let's add another condition to try to get rid of that. So I'm noticing, for example, that the moving average is trending down in this case. Let's do it the simple way. Let's go back to our design surface and drag in another, let's go to our condition blocks, conditions, and drag in a compare. So let's indicator compare to indicator. And so here we'll compare the moving average from the current bar to the moving average 2 bars ago. So here we'll type in a moving average, 50, and we're going to compare it to the moving average, the 50-day moving average from 2 bars ago. So if the moving average is greater than the moving average 2 bars ago, that will enable the buy if it crosses over. So here, this is a typical way to combine conditions. When you stack conditions like this, both of them have to be true. So like I was saying before, these indicator compare is more of a filter, right? So this one can be true on many bars. When the moving average is moving up, for example, it's going to be true you can see, for example, here, it would be true for all of this duration. Whereas the trigger, as it crosses over, will be true just on 1 bar, and when both of those are true at the same time, that enables the buy at market. So let's go ahead and run this and look at the chart. So you can see here, we did get a 1 whipsaw, but here, notice how we didn't buy when this crossed over because the moving average was moving down here, so we stayed out of that trade. And then we bought, right here you can see the moving average just started to go up, and you can see the values of the moving average up in the data, well, what we call the data window right now, the top of the chart. From here to there, actually we're comparing 2 bars ago. Okay, and of course we're comparing at much higher precision than we're showing there too. But that's a good demonstration of combining indicators. Okay, let's go back to our design surface. Hey, let's call that a complete strategy, and let's run it on, now you might want to run it on your portfolio backtest. And we're not going to want to use 100% of equity. If we did that, we would only be able to buy one position at a time. So let's bump this down to, well, even 3% to make sure that if we have a lot of signals at the same time, we can get all of those because we have 30 stocks at the same time. So let's run this on 10 years of data and run the backtest. Oh, that was very quick. Okay, and so you can see the equity curve. Actually, it looks like we could use a little bit more equity for our positions because it looks like we only got about 50% of our equity. So let's just bump this up to 5% and run the backtest again. And you can see, yeah, we're using more equity in places. And it's not such a great strategy, but overall it made a little bit of money in 10 years. Nothing to write home about. You can see down here at the bottom here, the profit was 22% overall. And notice that I hovered over this window here. I can click that and get to an APR value. So that's another little Easter egg for you. That toggles between APR and the total percent profit. And of course, you can go to the metrics report and get both of those values here. There's the profit percent, and the APR is below that. So 2% APR, right now you'd probably want to just buy the bonds. Okay. Okay, notice we didn't get a signal block, so just to show you that we can get some signals, let's say, for example, I ran the back test. Here I know I'm getting a buy signal, for example. So this date, this is the signal bar. Let's run the strategy to 9/18/2023. very quickly. We'll go to a specific date range, and let's just bump this back a couple years. Select a date, click off of that calendar, and then 9/18/2023 is our signal date. That will make sure we get some signals. Let's go ahead and run that backtest now. And there it is. There's the signal. Okay. So we only had one signal out of Dow 30, but this would, if it were actually September 18th in 2023, you could place these orders right from this window here if you're trading end of day. Okay. We talked about signals a little bit in the last lesson. Okay, finally, I know it's getting kind of long, so let's just take a look at these blocks again. I showed you right at the beginning that you could remove the blocks with these buttons here. Now, say for example you wanted to run the strategy to see the difference without this block. So you can disable a block with that middle button, and notice how the display fades for that block. So that means it's disabled. And now if let's go back to run it on a single symbol, and notice that our filter isn't working anymore. So we're buying when the moving average is moving down. Let's go ahead and leave it on this view and enable, go back to the design surface, enable that filter again, and run the backtest. And you can see now with the filter enabled, we don't buy there. Okay, so that's those are those two buttons. And then finally, this other button is when you have a block set up the way you want it, you can go ahead and collapse those and give yourself some more room to add blocks and things like that. So those are what these buttons do. And I think with that, we're just going to wrap it up with this lesson. And thanks for coming. See you next time.